talk a minute, if you will, about your comments there about the price. So in the old days when we were in a poor market, obviously, there were some really good deals to be had in the foreclosure market. Is it fair to say that it has to go through the process? It's probably in an up market going to sell for, reasonable selling price? Or is that not the case?
I think regardless of the market, there's this myth that you get a foreclosure property for a lot less, that you get a discount because it's in foreclosure. And in my experience, that's not necessarily the case. And where that is the case, that's because the buyer is assuming a significant amount of risk. The court will never allow the property to be sold below what it's shown to be its fair market value. So if the lender does get conduct of sale, they need to go into the court for an order approving the sale. And they need to satisfy the judge that the market value is being obtained here. So the property's been listed for a certain period of time. There's been open houses. It's on MLS. It's been on various websites. They have an appraisal done. And if the order comes in at that price, well, then the court will allow that to be sold. But there's no discount there. That's the market value.
Right.
Sometimes where you get a discount, this is a real concern for buyers who are acquiring a foreclosed property. There's a risk involved in buying a foreclosure, especially if the person being foreclosed resides at the property. Generally, when you buy a house, the vendor's there, they're getting the money, they're going to clean the place and they leave. Well, here the vendor really doesn't care anymore. They've lost their house, their credit score is taking a beating, they're being evicted, they have to leave. Odds are they're not going to leave that house in pristine condition. So as a word of caution to any buyer who thinks they're getting a foreclosed property at a discount, we have examples of just horrific conditions at the property after it's sold. And the bank has no liability for that. A foreclosed property is not what you see is what you get. It's what you will get is what you will get. It's as is, where is.
Almost so like a little bit of animosity on the part of the borrower.
Oh, absolutely. And I can think of a couple examples where the wires are cut, the pipes are taken out, the light fixtures are destroyed, they have a house wrecking party, there's animals, stuff, feces left all over the place. It requires a substantial renovation after. So that's a risk you take when you acquire a foreclosure property. So you might get a bit of a discount in that situation, but it's a risk reward. That's the challenge with it.
So that brings up another question. What if the owner's not living there and it's being rented? So you've got a tenant in there. What's their situation in terms of, are they allowed to stay there? Or have they got to move?
Well, they'll generally need to move as well. The court will generally give vacant possession. Now, if they have a written lease, and the lease is there for a period of time, the lease may be valid after that point, and the tenants may have the right to stay. But generally, in situations, we don't see that. Generally, if it's an investment property, it's not getting to that stage. The people have some equity, they're going to sell it on their own, that kind of thing. Generally, where you have the tenant, it doesn't get to this stage of the foreclosure. Generally. There are exceptions, of course. What we're dealing with more often is where the person's living there. Right. And they don't have the equity and they're just living there. So they got 6 more months rent-free and they don't care what the house looks like in 6 months.
So another question, I'm not sure whether you're familiar with this. Typically, if you've got a mortgage with a term on it, if you break that term, you've got a penalty. So if you're now in default and the lender chooses to foreclose on you, are they still able to claim that it could be a horrendous penalty over and above everything else?
That's a great question, Mark. In the old days, they never could. That may have been changed recently, but the general rule is that you're not allowed to claim a penalty on a foreclosure.
Okay.
So when we've counseled clients over the years, that might be to go talk to a trustee or a bankruptcy person, but rather than have to pay all that penalty, and if they're not going to buy after, not worried about their credit, they may go into like a voluntary foreclosure, so to speak. We would never advise a client to do that unless they speak to a trustee or a bankruptcy person who's a lot more specialized in that area.
Right. Excellent. Well, that's some great information. And I know, like I said, in this environment that we're in, I'm sure that it's something that's pretty current.
Oh, it is. Fortunately, land values or prices have gone up in the last year and a half, so it hasn't become as huge an issue. But, you think back to where we were a year and a half ago, there's a lot of people wrestling with this issue. One other point, though, and we spoke about this earlier, if the lender does sell the property, let's use some examples. If the mortgage is $300,000, if the lender were to sell it for less than that, the people get their equity. It generally doesn't get to there because the people would sell the property. But if there's a shortfall after the sale of the property, so if the mortgage is worth 3 and the fair market value is 250,
yep,
and the judge is satisfied that is fair market value, there's a $50,000 shortfall. Every mortgage has a personal covenant to pay. So there's still the requirement on the part of the borrowers, the guarantors, the covenantors, to redeem that $50,000. So even after the foreclosure, there's still a judgment against them for $50,000. And it's what we call joint and several liabilities. So if my wife and I have a mortgage, we run through the situation I just described. It's not 25 for me and 25 for my wife. It could be 50 for me or 50 for her or 40-10, wherever the bank can get the money from. So every mortgage has a personal covenant to pay, and it's what we call joint and several liabilities. So don't think for the borrowers out there that are in trouble that, here's my house, take it, now I'm off the hook. You're not. If there's a shortfall, you're still on the hook for that shortfall.
Mm-hmm.
Okay.
And how long is a typical time where if they don't contact you, do they have a time frame in terms of trying to pick up that balance that may be a shortfall?
I don't think there's a definitive time. They'll have a judgment. That judgment's good for 10 years. It could be renewed. I've had situations, I've had clients who've had that shortfall, and the banks just kind of, I guess they thought they couldn't get blood from the stones. They just kind of let it go, and that person now has a great credit history. So it's hard to give an accurate answer to that question. The longer it goes, the better off the borrower is, I guess.
Right.
Okay.
Yeah, one other thing too. So if the bank decides that they're going to let you go, I don't think this shows up on your credit.
Well, some banks will report that. Well, the foreclosure certainly will show up on your credit. Most lenders will report that.
They will they?
Yeah, I would think so, yeah. I mean, some lenders will report if you're a couple of days late, they'll put that down there. So that depends on the lender and their policies and what they want to do. But like I said, I've got a pretty good friend who went through a shortfall and had some credit card debt, and there's nothing at all on their credit bureau. They've got a great credit score right now, and so that lender chose not to report it. I think every situation is a little different. What a borrower could do, though, is pull their credit bureau after the fact and just see what the effect is on their score, on their beacon score, and that kind of stuff.
Right. Well, Tony, this has been great. I'm sure it's going to be great information for a lot of people out there, and I'm real happy that you took the time to come on today.
Oh, that was a very that was interesting. Thanks for having me on. I appreciate it.
Okay, Tony. Have a great day.
Thanks, Mark. You too.
Well, welcome back. I hope you enjoyed today's topic, which is foreclosure, which, like I said, is a very current topic. And as I always say, it's really important that you get the right advice at the right time. So make it a great day. Remember, 604-273-2002 or on the web at www.notapennydown.com. As usual, make it a great day, and I'll talk to you soon.